Term life insurance can be a good idea to protect your family if something unexpected happens. But with a variety of options out there on the market, how do you know that your insurance has the coverage that you need? Here to give us some advice is Peter Sashecki from Everything Financial. Good morning, Peter, and welcome back. Good to see you.
Nice to see you.
Yeah. Okay, so term life insurance, how does this work?
It's basically you're buying it for a set period of time.
Okay.
5, 10, 20 years. You're basically renting it. And 10 is the most popular time length because it tends to be priced about the best for length of time. So 10-year term insurance tends to be the most cost-effective and the most popular purchase for people who are buying life insurance.
I'm wondering what the benefit of doing a term versus just getting something that would be for a longer term than term. Because I think that, do you not get a better deal if you get it right off the bat and it lasts your lifetime?
No.
Okay.
The cost can be astronomical to buy something that's guaranteed. Now, granted, you're right. The earlier you buy it, the less expensive it is. But buying a type of what's called permanent insurance or a term to 100 insurance where the premiums are set can be extremely expensive. And insurance is one of those things none of us ever want to use. Home insurance, auto insurance. So if it's one of those things you hope to never have a claim on, why pay more than you need to?
Right. But if you need it, you need it. So how do you know if your policy covers you and your partner?
Well, look for some key simple words because we want to make this easy for people. Look for the word individual right inside the policy. So you may have one policy, and this is part of the misinformation that's out there that people are getting. They're being told, oh, it only covers one of you. But a lot of companies will provide a policy that you are both covered on, but it's one policy. But it's two separate death benefits. And the reason they do it that way is you save money on built-in policy fees. So look for individual. If the policy does not say joint, it's two death benefits under one policy. And if one of you passes away, the other person still has their insurance.
Okay, that's good to know. What happens when one of you passes away? Well, you just answered that question. Can you continue the policy when it does expire?
Yes, you can. And there's another simple term to look for are the letters R, the and sign, and C. We're really trying to make this simple. R and C, which means renewable and convertible. So using that 10-year term example, the policy is you have it for 10 years, and after 10 years, the policy will renew and automatically go to a new 10 years, but there will be a significant price increase. But if you've had any health issues or anything like that, you are still guaranteed the coverage. And at this type of policy, you can also looking at converting it down the road to a longer term policy. Every company has a little bit different rules, but at least if you have a R and C, they can't take the policy away from you no matter what happens with your health, as long as you tell the truth.
Looking for that. Okay, and it's important to tell the truth on those questionnaires, the health questionnaires. Who would be best benefit from a term insurance policy? Like, I mean, we're talking about younger people, people who are a little bit older. Like, what
younger
benefits?
People raising children. There you go.
That would be me.
That would be you, exactly.
You called me young.
You like that, do you?
That.
but that's true. People with a lot of need for insurance. You maybe have a mortgage to protect and pay off. You want to leave a lump sum of money to provide an income to your partner, spouse, or just, in your case, if you're a single parent, to your kids. Like, say, things like that. Like, you need to leave a lot of money behind, but you can't go spending some astronomical amount of money because there's other things. Oh, there's retirement to save for, there's bills to pay, there's a mortgage to pay, and so on and so on and so on. So you try and make the insurance the most affordable, or as we really technical term in the financial planning world, get the most bang for your buck.
Bang for your buck in most things in life. Peter, good advice this morning. Thanks for joining us.
Thank you.